Hey everyone, and welcome back to the Tesla Stock Podcast. This week we have a fascinating and, frankly, difficult set of stories that all revolve around one central theme: risk. We have a stunning new academic study that attempts to quantify the Musk risk to the tune of over 1 million lost sales. We have another recall for the struggling Cybertruck, raising more questions about its commercial viability. And we have a stark reminder of just how brutal the EV market is, with a key competitor pulling back. With the stock trading around the 441 mark, let's unpack this complex picture. Let's start with what is arguably the biggest story of the week, and it's a bombshell. A new working paper published by the National Bureau of Economic Research, led by researchers at Yale University, has attempted to put a hard number on the brand damage from Elon Musk's political activities. The researchers estimate that Musk's public partisan actions, specifically his role leading the White House's Department of Government Efficiency, or DOGE, and his controversial acquisition and management of Twitter, now X, cost Tesla up to 1.2 million vehicle sales over a 3-year period. The study concludes that Musk's actions antagonized his most loyal customer base, showing that Democrats are far more likely than Republicans to purchase a Tesla. The sales drop became visible starting in mid-2022 and was most pronounced in Democratic-leaning states and counties. This is a massive development. For years, investors and analysts have debated the Musk Factor. Is his massive public profile a net positive or a net negative for the brand? This is the first major academic study that provides a clear quantitative answer. The researchers believe his recent political activities have had a dramatic effect and have directly harmed the company's bottom line. This, of course, lands right in the middle of a heated debate over his compensation. As you know, shareholders are preparing to vote on a new, potentially trillion-dollar pay package. The board, led by Robin Denholm, is urging shareholders to approve it, warning in a letter that, without Elon, Tesla could lose significant value. This new study from Yale presents a powerful counter-argument, suggesting that with Elon's recent political activities, Tesla has already lost significant value, to the tune of over 1 million cars. It's a fundamental contradiction that shareholders will have to wrestle with at the upcoming meeting. Now let's move from CEO risk to product risk. Our second story is about the Cybertruck, which has just hit its 10th recall in less than 2 years since its introduction. This latest recall covers about 6,200 trucks and is due to a potential issue with an off-road light bar accessory that could detach and increase the risk of a collision. This comes just a week after another recall for over 63,000 Cybertrucks due to overly bright parking lights. Other issues have included steel trim pieces coming loose, faulty inverters, and even warning lights that were in too small a font. This is a death by 1,000 cuts for the Cybertruck's core marketing promise. This was the vehicle that was supposed to be really tough, not fake tough. Yet the constant stream of quality control issues, ranging from the serious to the almost comically minor, completely undermines that narrative of indestructible armored glass sturdiness. But the real story buried in this article is the sales number. The report confirms that in the last quarter, the Cybertruck, the Model S, and the Model X combined accounted for just over 3% of Tesla's global deliveries. This is a stunning confirmation of what many have suspected. The Cybertruck is not a new growth pillar. It is a commercial flop. It's an incredibly resource-intensive, complex-to-build product that is barely making a dent in the company's overall volume. It suggests that after all the hype, 97% of the company is still resting on the aging shoulders of the Model 3 and Model Y, and the Cybertruck has so far proven to be a very costly and high-profile distraction. So the CEO is facing criticism, and the company's newest product is struggling. But it's important to put all of this into context, which brings us to our final story. While Tesla is navigating its own challenges, its competitors are fighting for survival. This week, we learned that Tesla's EV rival Polestar is shutting down its 2 R&D sites in the UK and laying off 130 staff to centralize its engineering efforts back in Sweden. Why are they doing this? Because they are burning through cash, reporting a net loss of over $1 billion in the second quarter of this year alone. And their sales, while growing, are just a fraction of Tesla's. For example, in the UK last month, Polestar sold a record 2,758 vehicles. In that same period, Tesla registered just under 8,000. Polestar is majority owned by the Chinese conglomerate Geely, which also owns Volvo and Lotus, so it has deep financial backing. And yet, it is still being forced to make these cuts. This is an incredibly important piece of context. As much as we analyze and criticize Tesla's brand damage or its product execution on the Cybertruck, the reality is that making and selling electric vehicles profitably at scale is brutally difficult. This news from Polestar is a stark reminder of the Darwinian nature of the EV market. While Tesla is dealing with the problems of a king, many of its potential rivals are still just trying to stay alive. This reinforces Tesla's dominant market position and shows that even well-funded competitors are on the ropes, which is a long-term positive for Tesla as the market inevitably consolidates. So to sum it all up, a major new Yale study has put a number on the Musk risk, claiming his political activities may have cost the company over 1 million sales by alienating its core customer base. The Cybertruck has hit its 10th recall, underscoring its struggles as a product that has failed to gain any real sales traction and accounts for a tiny fraction of deliveries. And finally, in a bit of competitive good news, rival Polestar is cutting back its R&D and laying off staff, highlighting just how tough this market is for everyone but the market leader. This brings me to my question for you, and it's the central debate for the stock right now. What is the Musk Factor worth today? Do you agree with the board that he is essential for the future AI and robotics vision and therefore deserves his potentially trillion-dollar pay package? Or do you agree with the Yale study that his recent actions have become a net negative for the brand, actively harming the core business and costing shareholders sales? Let me know your take on this critical question in the comments below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening.